Hey guys, today, as promised, I'm excited to share my real trading journey with you, including my both strategies, one that's constantly profitable and another that I'm still learning currently. I'm around break even, yes, so it's sometimes small win, sometimes small loss, but overall it's about like break even, yeah. So what sets this channel apart from other trading and investing channels? Well, I just don't focus on showing off my successes. Yeah, I show my true learning process. That's all. I'm open about my mistakes and growing pains, creating a space where you can learn from both what works and what doesn't. I also don't use fancy indicators or overcomplicated things. Yeah, my trading style is simple and transparent, just clean charts and price action. If used properly, these straightforward approaches can deliver powerful, repeatable results. Just a reminder, I am a designer which is transitioning from the freelancing to full time trading and investing road. So just join me if you want to seek this road, if you want to take a look to my fails and successes and learn from my mistakes. Let's talk about the candlestick charts, which are the foundation of a price action trading. Each candlestick shows how price moved in a specific time period. Like the body represents where the price was opened and closed. Like you see, the body is this. And the wicks shows the highs and lows. So during, for example, if we have time frame of 1 hour, during this 1 hour, the price was moving from here to here, but it's opened here and closed here. For the red one, it's opposite. Like the price was moving from here to here, from top to bottom, but it's opened here and closed on the bottom. Green candle means that the price closed higher, red one that it's closed lower. Personally, me, I prefer to use bars. In my opinion, they look cleaner than candlesticks. They don't take so much space as well. The only difference here is that the opening and closing prices are shown with this left and right lines. Yeah. So the left line means where the price was opened, and the right one shows where the price was closed. So, for example, here it's opened higher, but it closed lower. Let's break down three main directions the market can move. An uptrend or bullish market means prices are generally moving higher over time. So, if we will take the arrow and move with this chart, we'll see that overall we are moving up and we have higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and the trend is not broken. This is called a bullish trend or uptrend. So the second trend is bearish market, means the prices are moving lower. So if we will take this arrow again and move with this chart, we see that it's going down. And overall, the structure is we have lower low, lower high, lower low, lower high, lower low, lower high. That means that the market is bearish and the trend is going down. Sometimes we have periods when the market is not moving anywhere, it's moving sideways. We call it consolidation or range. Basically, when we see that the market is standing in some area, we call it consolidation.
So let's talk about the trend line trading first. I trade always with trend. So as you see here, the trend is bearish. So that means that I will not be opening long positions, only short positions. So for example, we have this trend line inside this big trend, and we see that it was respecting our price line. We had one touch, two touches, three touches, four touches, and five touches. And then we have a breakout. So what I do when I'm watching this instrument before, I open the second time frame. I usually trade 30 minutes. And as we see, the price touched, this is the last touch here, yeah, touched the trend line, then it's moved back and started to go down. Sometimes price can go very fast, but then I don't trade it. I need to wait my situation. If you will not wait your situation, you'll probably lose the money. As an example, this trade could go that way. I'm waiting, this candle closes, and I see the good situation that the candle is at the bottom. The next, I'm waiting until this candle will close below the level. Then I'm setting my order and I'm putting my stop loss above this candle because we don't have any consolidation here. If it would be a consolidation, I would put the stop loss above the consolidation. And then I usually take at least 3 risks profit. Of course, we could take more profits here, yeah, but this is the history. It's much easier to show on the history than in a real life. You cannot know that the price will stop here. There are no guarantee. There are no guarantee that you will take 3 stops, but the risk is much lower when you are making the rules for yourself. So as you see, the trend is up here, and what I will be searching here inside this big trend, I will be searching smaller short trends like here and like here to trade them. Let's take as an example this part. Let's move to the August 20. So this is 30 minutes time frame again, and we see this local downtrend in the global uptrend. And we were waiting for situation. We see that we have 1 touch, 2 touch, 3 touch, and 4 touch. I usually need at least 3 touches, but you can do the less, but it's more risky, I would say. And here we see that the price again didn't have consolidation. This is not the best situation. And we have the confirmation candle which closed up. So what I would do here, the entrance would be here definitely, yeah, and I would go below this candle because we again didn't have any consolidation. And then we need to take at least three risks. And let's see how it behaved. It is a long trade. Yeah, we need to wait longer here, but it worked out. As you see, we almost were stopped, but it still worked out. Now let's talk about my profitable trading strategy, horizontal level trading. For the horizontal levels trading, let's take a look into the same instrument Solana we had before. As I mentioned, I'm trading only with trend. And here, as you see, we have uptrend. Yeah. So let me just show you that this is the uptrend. Yeah. And we are taking a look into this situation, not here. Here is going downtrend again. Let us move here to this situation where we had September 8th. And we don't have consolidation here, but same as in the trend line trading, we are waiting when the candle is closing above the level. We'll set the order here below this candle. This is very long candle, so we don't need to go lower. And as always, you have 3, 2, 1 risks here. So we would need to wait for a few days here, but it's not too long anyway. So it took us 2 days, 5 hours. And that doesn't mean that you need to apply the strategies only on the swing trading. You can do the day trading as well. The only thing on the day trading, you have much more noise, and probably the amount of positive trades will be lower. Before entering the trade, I have some rules. Let's tell that this is a long-term short trend. And we have this trend line, which we are planning to trade short. So before entering the price, what I love to wait is when we have a short consolidation on the smaller time frame. For example, we have like 5 or 6 candles which are going down slow. This is a very good sign that it will be breaking out. If we don't have that, then I usually wait when the candle will be closing below the level. And the better sign is if the candle closed almost at the low of the price. This is a sign that it will move forward down. For the horizontal levels trading, it's the same. I love when I see the consolidation, and especially on the smaller time frames when we have multiple candles which are moving down like this. If we don't have that, I'm waiting, same as on the trend lines, until it will close below the level. If you are trading on the 5 minutes, so it would be perfect to wait up to 3 candles maybe, but I am trading 30 minutes. Now let's talk about managing your trades. Take profit and stop loss are essential tools for both protecting your gains and limiting your losses. A take profit is a preset price where your trade will automatically close once the market hits your target. And stop loss works the opposite way. It's level where your trade will close to prevent deeper losses. Let me show you how take profit and stop loss orders are working in the trading view. So as an example, we have this tool for the short trade and for the long trade position. We can visualize this for ourselves. For example, I am entering this trade and my stop loss is here, and my take profit is here. So if the price will move out of this green area, it will automatically close my position and will take the profits. But if the price will not get here but will move against me, it will automatically fixate the loss. And now let me show you how it works in real life. As an example, I will show this trade. For example, I'm doing the short order. And now we have the price, entry price here, take profit here, and stop loss here. And we just need to click the sell. I cannot do that because the price is much lower in real life now. Additionally, to take profit and stop loss, we need to have our risk management. There are no way that you will be successful in trading without a risk management. Risk management is critical for long-term success in trading. One of the most important rules I follow is to risk no more than 1 to 3% of my account on any single trade. This way, even if a trade doesn't work out, the loss is manageable and it doesn't threaten your entire account. Proper position sizing, choosing the right amount to trade each time, helps you to stay in the game, avoid emotional decisions, and build consistently over the time. Let's tell that you have $1,000 at your account, and your risk is $100. This is 10%, yeah? So that means that you can have only 10 trades. And if all of these trades will be not profitable, you will lose your money. But if your risk is 1% with the same $1,000, you can make 100 bad trades in a row. And that goes to the next step. When we are trading, we need to take profit at least 3 to 1. What I mean by that, as we will have the same short position, we need to have at least 3 risks in one trade profitable. So that means that you will earn at least $30 if you will risk with $10. And then we are going to the next step. It's statistics. As you see, I have only 4 profitable trades here, and overall we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 trades. And with only 4 trades, I have earned $187. The other thing statistics is doing, you see all your mistakes and you can learn on it. I fixate all my trades, all my profits, all my losses. I add the screenshot where I see the trade, where I see my mistakes and where I can learn. And I also have my notes where I'm writing what I'm feeling, where I see my mistakes, why I have done that. And in the end of the month, I'm trying to analyze it and don't repeat the same mistake. For example, trend line breakouts in my statistics is much worse. You see, I have multiple not profitable trades, much more minuses than pluses. And in the end, I have only 25% of profitable trades, and I'm still profitable because I trade 4 to 1 most of the time. Sometimes it's 3.5, sometimes it's 3, but most of the time it's 4 profits. And that makes me profitable even with the 25%. But you can ask, how can I have statistics when I never traded before? It's not a problem. TradingView is providing a paper trading account where you can trade with a fake money and learn. When your statistics will be positive and you will want to try to trade with a real account, you can connect your account here as well. For example, Interactive Brokers, Binance, Bybit, Forex.com, and so on. You can find most of the brokers here. Thanks for watching. If you found this helpful, be sure to hit the like button, subscribe to the channel, and leave the comment with your thoughts or questions. Remember, continuous learning, discipline, and honesty are what set great traders apart.